Okay, let's dive into a truly fascinating economic story. In a world where the US dollar is king, it's pretty much unheard of for a currency from a developing nation to gain this much ground this fast. But believe it or not, that's exactly what's happening with the Egyptian pound.
So, what on earth is going on here? That's the big question we're going to tackle. How is it possible that the world's main reserve currency is actually losing ground to an emerging markets currency? I mean, this whole thing seems to fly in the face of the usual economic playbook. Today, we're going to unravel this puzzle piece by piece. And here's our roadmap for solving it. First, we'll look at the trend itself. Then, we're diving deep into Egypt's domestic strategy that kicked this all off. After that, we'll zoom out and see the huge role the U.S. Federal Reserve is playing. Of course, we have to look at the warning signs, and finally, we'll wrap up with what to keep an eye on.
All right, let's get right to it. This surprising rally of the Egyptian pound. And we're not talking about some minor blip on the radar here. No, this is a major shift. And it has people in global finance sitting up and paying very close attention.
So here's the trend in a nutshell. You've got the US dollar, which has been getting weaker, and then you have the Egyptian pound doing the complete opposite. It's been climbing and climbing steadily. This is the exact reverse of what you'd normally expect to see, and the reasons why are really interesting. It's a story with two main actors, one in Egypt and the other all the way over in the United States.
Okay, so let's start with what's been happening inside Egypt. This turnaround didn't just happen by accident. Nope, it was the result of a very deliberate, very aggressive economic playbook. And it was all designed to do one thing: get foreign currency flooding back into the country.
And this was the 5-point plan that made it happen. First, they went all out to supercharge cash inflows from every possible angle. We're talking remittances, exports, and getting tourism booming again. But, and this is a big but, they had to make sure that cash ended up in official banks, not on some black market. So to lure in foreign investors, they did something incredibly bold. They hiked interest rates to a whopping 25%. With that momentum, they secured huge deals with the IMF and other major investors, which all paved the way for the final critical step: floating the currency to let the free market decide its real value.
And the results of that plan? Wow, they were seriously dramatic. Just look at this number. Remittances, so that's the money sent home by Egyptians working overseas, they skyrocketed by over 70%, hitting almost $33 billion. That alone is just a massive injection of foreign cash, directly boosting the supply of dollars in the country. And a direct result of all those policies was a much, much stronger financial safety net. As you can see, Egypt's foreign currency reserves started climbing in a big way, going from around $34 billion up to a projected $48 billion. A growing buffer like that sends a really clear signal to the market: Egypt can back its currency. But here's the thing. This story isn't just about Egypt. A huge piece of this puzzle is actually happening thousands of miles away, inside the U.S. Federal Reserve. Because what happens in Washington doesn't stay in Washington. It's having a massive ripple effect and acting as a powerful catalyst for the pound's strength. So the key idea to get your head around here is something called monetary easing. It's basically what happens when a central bank, like the Fed in the US, starts cutting interest rates. They do it to make borrowing cheaper and give the economy a little boost. But a major side effect is that it makes holding on to that country's currency, well, a lot less appealing for investors who are chasing high returns. And that's the crucial link back to Egypt. As the markets start to expect the Fed to cut rates, three things happen. First, the US dollar itself just gets weaker against pretty much every other currency. Second, investors start looking around for better profits. And suddenly, a country like Egypt offering over 20% interest looks incredibly attractive. And third, it makes Egyptian government debt a much hotter commodity. It's a classic capital follows yield story. But you know, this positive currency story isn't the whole picture. To really get a clear view, we have to flip the coin over and look at the risks that come with these kinds of aggressive policies. And here is the single biggest threat at home: inflation. So while the pound is gaining value on the world stage, stubbornly high inflation, projected to be near 15%, is threatening to just eat away at the purchasing power of everyday Egyptians. A strong currency is great, but if your daily cost of living is soaring, that creates some serious problems.
And while inflation is the big one, it's definitely not the only headwind. You've got external threats too. Any instability in the region could easily scare off tourists and investors. And because Egypt imports a lot of key commodities like wheat, any sudden spike in global prices could really throw a wrench in the recovery.
So where does that leave us? Well, the future of Egypt's economy really comes down to a delicate balancing act. You've got these powerful tailwinds pushing it forward and these pretty significant risks trying to hold it back. And when you lay it all out like this, you can really see the two opposing forces that play. On one side, you've got these powerful drivers, strong currency inflows, those crazy high interest rates, and a weaker US dollar helping things along. But pushing back on the other side are the headwinds, that high domestic inflation, regional instability, and the constant threat that all that foreign hot money that rushed in could rush out just as fast.
So what's the short-term outlook? Well, the general consensus among analysts is that this trend is probably going to continue. As long as the US dollar stays relatively weak on the world stage, the Egyptian pound is in a pretty good position to keep making those gradual gains. And all of this leaves us with the ultimate question. We've seen the impressive results of Egypt's bold economic plan, which has been supercharged by global conditions. But are we looking at a temporary, opportunistic recovery that's just fueled by high interest rates and a weak dollar? Or is this the beginning of a real, durable, and lasting economic transformation? The answer really depends on whether those tailwinds can keep overpowering the headwinds. Thanks for joining The Explainer.